Hello and welcome to your members only market briefing with me, Kevin D, for the week starting Monday, October 28th. So in today's video, or actually I'll tell you about me a little bit. So I'm Kevin D, obviously. I'm a full-time trader, 25 years of experience, been doing this a very long time. CMT level 1 and level 2 candidate. Been a mentor of the investor community since 2020. Born and raised in Vancouver, love sailboat racing, hiking, ride my bike a lot. So that's a little about me. Let's move on. I'll get my camera out of the way here so you can see the disclaimer in case you want to read this. But everything we do here is for educational purposes only. We're not investment advisors, do not provide investment advice. All trading and investment decisions are your own and done at your own risk. All right, so now that that's out of the way, I want to welcome everybody, all the new members that we have come over this week, and everybody who came into the general chat in the Discord, and who are not new members yet. But I thought I'd throw this video in the Discord for you, so you can check out what we do here, and you can see this video was posted in the general chat channel. If you want to join and try out the free 2-week trial, there's no obligation. You can cancel anytime. The channel right below the one you're in now, or the one you just came from, where it says join now here, you'll find a link there to sign up. And then you'll be able to come into the members only side of the Discord. You'll get access to all these other channels and be able to join in the conversations. So hope to see you there and hope you enjoy this video. So we will move on here. So in today's video, we are going to look at earnings as we do every week. This week is huge for earnings. There are so many big companies reporting, and we've got 5 of the Mag 7 reporting this week. It's also a huge week for macroeconomic data. We've got GDP, we've got big jobs numbers this week, we've got inflation numbers. So we'll take a quick look at all of that. I think we've been seeing over the last week or so some market jitters, and I think that's going to continue as we move forward. I mean, as I'm sure you know, there's an election coming in the U.S., so we've got to think about that, and we'll talk about that briefly. And I think we're also, just because of all this, all these earnings reports, all this economic data, the election coming, I think we're going to see intense volatility this week. I think this market is going to get pushed and pulled around every day and all day this week. So we need to watch out for that and be careful. And if we don't necessarily have to trade, but if we do, we probably want to take smaller position sizes in our trades. Be a little more cautious this week, but also make sure that we jump on opportunities as they come up. So let's dig right in here. We'll start with our earnings calendar. And you can see here there's a lot going on, and I've highlighted some of the names that I'll be watching a little more closely. Starting tomorrow with onsemi. This will give us, semis have been quite choppy lately, and they're not all going up together. So I'm going to be really interested in onsemi tomorrow morning. After the close on Monday, we have Ford, but the biggest name for Monday afternoon. On Tuesday before the open, we have SoFi. That's always an interesting name when they report. Royal Caribbean is one that interests me. Crocs can be a fun trade sometimes on their earnings. Not every time, but sometimes there's some really good action after their earnings there. After the close on Tuesday, we've got some of the Mag 7 reporting, or a Mag 7. I kind of, almost throw AMD in there as a Mag 7, but we've got AMD reporting. Google is reporting. Snap is often interesting. First Solar could possibly be interesting. This is the first solar company we've seen reporting in a while, and that industry has had a really rough time with interest rates being high. But and that they're probably looking forward to this election. They would be looking forward to it more if Harris was projected to win. I think, but I think this will be a really interesting earnings report from First Solar. Before the open on Wednesday, I think the most interesting name there is Caterpillar. Humana, the healthcare name, that may be interesting as well. And I mean, there's some other names that are interesting, but I mean, there's so much going on. I don't want to really split my focus too much. On Wednesday after the close, Microsoft, Meta, a couple of really big names. Coinbase is going to be interesting. Robinhood is usually interesting. And I personally like Carvana. It's another one of my favorites. I actually have a position in Carvana right now, a swing trade, which I will probably exit before earnings, but I may play the earnings reaction. I may, end up going back in it. We'll see. On Thursday before the open, we have Uber. That's usually a good one. Good, often a good play out of that one after earnings. On Thursday after the close, Amazon, Apple, Intel. I mean, look, you can look at all these really big names. You could just keep going down this list and find more big and interesting names too. Before the open on Friday, I think ExxonMobil is probably about the most interesting name. Chevron's going to be pretty good too, but I'll be watching ExxonMobil. And that is about it for earnings. Going to keep us on our toes, isn't it? On the economic calendar. So, over the weekend, the Fed blackout began. The Fed blackout starts about 10 days before the rate announcement, which is coming up for a week from Wednesday. So we don't have to endure any Fed speak this week, which is fantastic. This week is going to be volatile enough without those guys speaking. So yeah, I always like this week. It's a really nice break from those guys yapping. On Tuesday, we have CB consumer confidence. And we also have the JOLTS job openings. So consumer confidence is obviously important. It really affects, we want to know the sentiment for the average person out there. JOLTS job openings is our first look at some of the employment data we're going to get this week, which all leads up to Friday's non-farm payrolls. So we've got a number of releases coming with regards to jobs. Wednesday, before the open, we have the ADP non-farm employment change, and you've seen in the newsletter how I remind people every time that this number is often very inaccurate, and the market will often react to it as if the number is gospel. Which is odd, because I mean everybody should know that this is a really inaccurate number. It's just sort of a hint maybe of what may be to come. So that's coming. We'll watch the market's reaction to that. We also have advanced Q3 GDP. This is the first look. If you don't know, there are 3 GDP reports that come out, all about a month apart. This is the first one for Q3. So this is likely to garner the largest response from the market. The other ones are just minor revisions to this number, but this will be very closely watched on Wednesday. Thursday, we have Core PCE and the Core PCE price index. Core PCE is the Fed's favorite inflation measure. So, it's coming out a week before their rate announcement. So this is going to be very closely watched. The market will almost definitely react to this unless it's completely in line. But at the same time, though, the market right now is more interested, or the Fed seems to be more interested in jobs numbers. Therefore, the market is more interested in jobs numbers at the moment. Unless we see a big change in PCE inflation, we shouldn't see a really big reaction in the market from this number. We could see a bigger reaction from unemployment claims, though. So we'll have to watch out for that on Thursday as well. And I'll just get my face out of here for a sec so we can see this last little bit here. On Friday, non-farm payrolls. This is the really big number of the week. in a week that's filled with big numbers, this is the really big one. This will almost undoubtedly move markets. We also have the ISM manufacturing PMI, a number that can move markets on its own. But compared to the non-farm payrolls, it's somewhat minor. So as you can see, a very, very busy week for economic data. That's going to keep us on our toes. All right, so we're going to move into the part of the video where we take a look at the market. We start with the major indices. We move on to a quick look at international markets. We'll look at some important commodities. We will look at the major sectors, most of the major sectors. We'll look at some setups we're watching or have been watching, setups from last week. And we'll look at some new setups that we can watch moving forward this week. So let's dig right in. We always start with a look at the S&P 500. We're looking at the SPY ETF. And you can see that we are firmly in an uptrend. We've been above the 21-day moving average. That's this blue line right here. We've been above that for, getting close to, about 6 weeks now. We came down and tested it on Wednesday. We had a bit of an ugly day on Wednesday. Tested it, survived that test. Notice also it came right down to the breakout level from this previous consolidation and bounced up again. Retested again on Thursday. On Friday, we popped up nicely at the open. Went up for the first hour or so and then pulled back. So this is not the nicest candle. If this were right at the top of the uptrend here, we'd be calling that a shooting star, and that's a bit of a bearish candle. Don't like to see reversals like that, but considering everything we've got going on right now, it's not terribly surprising that we see some selling into Friday, a Friday afternoon. Less than a week and a half now away from the election, and with everything we've got going on this coming week. And what was expected over the weekend with, Israel bombing Iran. Now, we, as I'm recording this, we don't really get a sense for, none of the markets are open, so we can't get a sense for, how does the market feel about Israel bombing Iran. And the only market we can look at is the crypto market. And the crypto market is it's a good proxy for risk. This is telling us that the market doesn't care that Israel has gone and bombed Iran, or is not terribly concerned about it, because crypto's going up slightly. When we've seen this happen before, we've seen big moves down in the crypto market as the market just goes into that sell everything mode. So I don't think that's what we're going to see from this particular event when our futures markets open a little later this afternoon. And the stock market itself, goes into regular trading hours tomorrow morning. So I don't think that particular event is really worth worrying about too much. So moving forward, I'm expecting that SPY is just going to chop around sideways. I don't think this is the week that we're really going to break out to new highs. I could be wrong, though. I mean, earnings could certainly change that, and favorable economic data could change that. But I just think that the bulls are going to be reluctant to really commit too much this week, and the same goes for the bears. Short sellers are probably, they'll make little tries and probes and tests here and there, but I don't think anybody's really going to want to be very committal to anything this week other than earnings plays, because really ultimately that is the most important thing. Everything that we do, really comes down to earnings and what is the reaction to earnings. So let's take a look at the Qs. Sorry, this should pop up in a sec. There we go. So you can see on Friday, or you can see that, for the last week and a half, really, we've just been consolidating sideways. Actually, more like 2 weeks. On Friday, though, we gapped up and went higher and pulled right back. And we've left behind this gravestone doji. And if that sounds negative and bearish, it is. It's a bearish reversal candle. Again, I'm not, in other situations, I'd be a little more concerned about this candle than I am now. But considering what's going on, I'm not that concerned. I think this is just showing us, this is a visual display of just the jitters in the market right now. And I don't think it means that we fall off a cliff and go into a correction or anything like that. I just think that it's a sign that we are going to experience more volatility this week, and that we'll probably chop around in a range in here. Let's move on to IWM, the Russell 2000 Small Caps. And you can see that this had a pretty bad week. We were looking to start the week coming out of this nice little bullish pennant here, nice bull flag, just under this gap, just under the 52-week high. You can see how far back this gap goes, the level we're at here. This gap goes way back to November of 2021. We tested it at the end of December that year. So it's been a long time to get back up here. And it's not surprising that we come up and continue to test this level. It's a very important level, and the index and these stocks within it are just going to need to build some strength before they can break out through that. So, not a surprise that we saw such a strong candle, a strongly negative candle on Monday once we started to break down out of this flag. I am a touch surprised that we broke down through the 21-day moving average. We broke down through this old trend line. You can see this trend line goes way back to October of 2023, so a year ago. And this trend line, it acted as support, it has acted as resistance, and it's acting as resistance again now. Again, it's a little concerning. I mean, this is a bear flag right here, right on top of the 50-day moving average. A break below this would be concerning, and I would then expect to come down and at least test this 100-day moving average here, maybe close this gap. I think we're even odds that we just go back up from here, up and maybe chop around and consolidate some more. Let's take the volatility index. I'm expecting to see this go higher this week. So you can see that the volatility index has been, basing in here under 20 for just over a week now. It's closed above 20 for the first time since the 15th. So in about a week and a half, we had our first close above 20 on Friday. I think with everything going on, all these earnings, all this economic data, and the election coming, I wouldn't be surprised to see the volatility index just start grinding its way up towards the top of this range. If something especially negative hits the market, then we could break out above this 23 to 24 area. Let's take a look at our 10-year yield. I think this is going to start driving the market more. So you probably know that there's an inverse relationship between stocks and the 10-year yield. It has been for a while now. That flipped. It used to be the other way around, but that script flipped. Once rates started going up and we're trying to get inflation under control. Well, that inverse correlation is sort of broke for a little bit. But it is starting to come back into play now. And you can see that this 10-year yield is almost relentlessly grinding higher. We had a small pullback a couple of weeks ago, another leg up, and now we've got a little bull flag forming and right on top of the 200-day moving average. And above, some potential resistance areas. So this is somewhat concerning. If yields continue to move higher, the bond market is telling us that we're not going to get as many rate cuts from the Fed as we've been expecting. Still a very high probability of a rate cut week after next. But as we move farther out, it becomes much less certain regarding these rate cuts. And we're seeing that in the bond market here. One of the other markets we like to look at is the dollar. And same with the dollar. You know, there's a generally an inverse correlation, the dollar to the stock market. We're starting to see that come back in play again as well. You know, you can see the market has been climbing, you know, sorry, the dollar is strongly higher. And the market hasn't been paying much attention to this, but I'd argue that, you know, over the last week or so, the market has been starting to pay attention here. We've got a bull flag forming here as well. Really don't want to see this go any higher. This could really have a negative effect on stocks, I think, if it goes much higher. Let's take a look at our dollar cost averaging system. We'll start with SPY, and everything is still green, of course. This is a weekly chart, and we use this to, you know, for anybody who's doing a dollar cost averaging system, just basically to turn the system off. When this turns red, you generally don't want to be putting new money into the market, because it means the market, you know, may very well be in a downtrend, or it's under a time of stress. And it's a little bit more of a dangerous time to be putting money into the market. These red signals often, but not always, lead to a downtrend. You can see that, you know, we had a downtrend, and there's, you know, the downtrend was pretty minor on these last couple of signals, but previous ones have shown that, you know, a more lengthy downtrend beginning. Yeah, this is just a little indicator for our members. You know, it's a cautionary indicator. But all systems go right now on SPY, on the Qs, and on IWM. But as you can see in IWM, you can see the MACD is rolling over here. We could very well see this one turn red by next week if IWM continues to move down. All right, let's go look at some international markets. We will start with ACWX. This is the all-world ETF, all-world excluding the United States. So it really gives us a sense of the global market, and you can see that we've been in a pullback globally. We had a nice intermediate term uptrend. We're in a long-term uptrend, but we had a nice steeper intermediate term uptrend for a while. And short term, we're in a pullback, and we've got a little bit of a bear flag forming. Again, I think this sort of reflects a lot of the uncertainty that's going on in the world right now. I'm not terribly concerned. I'll get a little more concerned if we drop below this important support level here. Another market we'd like to take a look at fairly often is China. China has pulled back. It's consolidating now. You know, it's still well above this base back in here that it broke out of in the middle of September, and consolidating some of those gains. I think we're going to see China turn higher. We've got to see some of that stimulus that they've been promising. We've got to really start seeing that cash has got to make its way into the market, and then we'll see our Chinese stocks going back up. Okay, we'll look at some commodities now. We'll start with gold. Gold made a new all-time high this week. It's got a nice little base going. It's been basing a lot in the recent past, and it breaks out to the upside every time, sometimes with a little fake out to the downside first. I would suggest that if you see, if you like gold, and this is your kind of player, and this is not investment advice, remember, but when you see a breakout of it, a sideways consolidation like this, and down to the 21-day moving average, well, it doesn't stay there long, and you get a nice little pop. Gives you a nice little better entry if you're a breakout player. So there could be a play there. Copper is one of the other metals I like to watch. Copper is a bit of a proxy for China, though. And if you compare this to the China chart that we just looked at, you'll see that they're fairly similar. But there's a good consolidation going in here. We've got an intermediate term uptrend going on. Nice consolidation right on top of the 50-day moving average. The 100-day moving average is right there. This should support. If this doesn't, we could see a quick plunge to the downside. Let's take a look at oil. So this is crude oil futures. When it pops up, there we go. The oil is, as always, quite volatile, and often ruled by tensions in the Middle East. We'll probably see oil go up overnight. However, maybe the veil of uncertainty is lifted, and with the attack in Iran, and they apparently have not attacked any oil facilities. Maybe the oil market sells off. Maybe we break this trend line. It's kind of a tough call. Nuclear has been really hot lately, with all the data centers talking about, investing in nuclear, building small nuclear plants next to their facilities and all that. And you can see that this has been a really strong uptrend. We've got a little bit of pullback and a bit of a pennant forming here. This is a bit of a bearish formation, but I'm kind of expecting to see this break to the upside. I think this is a trend that's just getting started. These data centers need a lot of power. And I was reading something earlier today about Amazon having to slow down on data center expansion because they can't get water and power. So that's quite interesting. All right, let's move on and look at some major sectors. Start with the energy sector, and you can see that this is basically just consolidating sideways. Has been for months, really. Consumer discretionary. This had not too long ago broken out to a new 52-week high, pulled back from there, consolidated, kind of had a really feeble attempt at a breakout, failed from there, came down, came out the bottom of that range with this nasty red candle, and that was the day before, that was right before Tesla earnings, and then of course gapped up strongly on Tesla earnings because Tesla is in this ETF, of course. Friday gave us one of those shooting stars, or a gravestone. This one is a shooting star. Made a new 52-week high and then pulled right back and gave almost all of it back. That's not ideal. That's not a bullish look. Industrials. Okay. This had broken out to a new 52-week high recently. Has since spent the whole week rolling over from there, and is even now, we have a couple of closes below the breakout level. Not good. We do have this uptrend just below, 50-day moving average just below that. Caterpillar's earnings, I think, were they Monday after the close? Anyway, or Tuesday. We got Caterpillar earnings coming up. They're a really big a component of this ETF, so that could turn this one way or the other. Financials, I don't like the look of this one bit. When financials are going up, it's hard for the market to go down. And the reverse is kind of true. So we had this really strong move in financials when all of their earnings started coming out. A little bit of a pullback, no surprise, because the flow of information there is slowed. So not surprising at all to see that pullback. We had a nice tight little consolidation. And then on Friday, you get a breakout to the upside out of that, and immediately turns around, makes a big bearish engulfing candle, and breaks out to the downside of that little consolidation. Now, that bearish engulfing candle, failed to make it to the 21-day moving average, before it managed to find a stopping point there. So that's good to see. But I wouldn't be surprised now to see a little more downside coming in financials. Let's take a look at healthcare. This sector is it's been a little all over the map lately. We had it had been going sideways, kind of building a base. It broke out of that base. It had a nice move, made a new all-time high, and we have been going, trending down ever since. And that downtrend seems to be accelerating. There are some big healthcare names coming this week. Not only the direct healthcare providers like and insurers like Humana, but also some of the pharma names like Eli Lilly. That'll be interesting. There should be really good support down in around 147. You can see the 200-day moving average is right there. That was more or less the top of the range when it was building this base. So should be good support there, but we'll have to see. Let's take a look at the communications sector. I'm not going to look at some of the defensive sectors like REITs and utilities. They're pretty much just chopping sideways for now. But communications here, you can see that this made a new all-time high on Friday and then pulled back from there and gave us this shooting star candle, a bearish candle. Again, just like with the others we've seen here, I'm not too concerned because I think this is just, again, jitters in the market. You know, a lack of real commitment right now, you know, one side or the other. Let's see, technology sector. Has been kind of, you know, chopping sideways. It is in more or less, it's in an intermediate term uptrend. Still hasn't been able to get back to that all-time high that it set back in July. And you can see pretty choppy action over the last week and a half. Greystone Doji, of course, on Friday, but support at the 21-day moving average. I think we continue to see this chop around a little bit, probably until the election. SMH, semiconductors, very similar price action to technology, and having trouble getting through a resistance level there. Let's move on and look at our Mag 7. We'll look at NVIDIA first. This broke out to a new all-time high this week, and it is consolidating up just under that all-time high. It's NVIDIA. I think we can expect to see this go higher. There's going to be little pullbacks here or there, but people will buy those pullbacks. Okay, Meta. This has pulled back recently. It's finding support on Wednesday and Thursday at the kind of the bottom of this consolidation that it had broken out not long ago. You know, my opinion of this is the same as the rest of the market. We seem to continue to see some, you know, consolidation higher, or consolidation, and then probably a move higher. Apple. I think this one was, yeah, okay. So the uptrend on this one is holding. It kind of broken out. It's been a little messy, but you know the trend is certainly up in this. And we can, I think, eventually, you know, we'll see this back at all-time highs here, and then eventually breaking through. Probably won't break through this week. Oh, wait, they've got earnings, of course, this week. So, yeah, maybe they break through earnings. Earnings aren't great. There could be, you know, breaking through this trend line, breaking through the 50-day moving average. You could see a quick move to the downside if their earnings are not good. Amazon. Yeah, again, you know, consolidating sideways, just kind of waiting, really just kind of waiting for earnings coming up. You know, a little bit of gap on Friday, but then a Greystone Doji. Netflix. This is doing well since its earnings. So you have this nice big gap up on earnings. Some follow through, consolidation, not surprising to see this consolidate. And I think we will continue to see this consolidate. But I really doubt that this gap gets filled. I think that Netflix is going to move higher as the veil of uncertainty is lifted as we get past the election and all of that. Google. This is starting to look really interesting here. It's been kind of messy. I haven't been paying much attention to it because it just doesn't look like it's going to do anything, and it hasn't been doing anything really. But it's really kind of starting to tighten up in here now. And you can see we've had a couple of little fake out, you know, attempts to break lower. Found support at the 50-day moving average, found support at the 200-day moving average, of course, and moves right back up into the top of this this little descending triangle. I think that we could see a move out of there, come up and close this gap. You know, and maybe we see that happen this week. Earnings are going to be, I think they were Wednesday as well. All right, Microsoft. It's similar to, Amazon and Google, chopping around, kind of sideways, trying to move a little higher, making higher lows, but having a hard time making higher highs. And again, I think we just have to wait for earnings for this to resolve itself. Tesla, unless you live under a rock, that Tesla had a nice beat on earnings, a huge gap up. I think there were probably more shorts than maybe people think in this. But you can see the gap up here. I'll just draw that gap in. We have closed this gap from back at the beginning of the month. I want to leave that there because I think there's important levels here that we're going to need. And you can see that I put a Fibonacci retracement on here. So I took our fib from the close before earnings up to the close on or the high on Friday, because I think we've got to watch out for retracement. We've got some resistance overhead. There's an old pivot that goes way back to back in the last year, back in the last year, December. There's some levels here that we're coming up on. And I think that, this has had a really nice move, and I think it needs to take a rest. So that could be in the form of a little bull flag. It could be in the form of a pullback. If we do pull back, I don't think we pull back any more than the 382 retracement, the bottom of this old gap. Maybe we only come to the 0.23 retracement, which is basically the top of that gap. I really don't think that, this other gap down here is going to close. I also want to draw in. I should draw in the gap, the earnings gap that it left behind. So it was from our close down here to this open. So there's, we've put a gap onto the gap. Yeah, I don't think. While I do think there's going to be a pullback, I think it's going to be minor, and I think it will find buyers. But if you like to play short, there could be a decent, quick little short in there. All right, let's take a look at some of the setups that we were looking at and playing last week. We'll start with app. Actually, we've been playing app for AAPL for ages. Let me just wind back the chart here because we've had so many opportunities in this. It really started back in early this year, or even last year. Basically, this formed this cup and handle all of last year, and we've been waiting for it to break out, and finally it broke out in January. And it was pretty easy to get in. It gave you a little bit of heat, and it's just been in an uptrend ever since. And it's had plenty of consolidations that it's broken out from. There have been so many opportunities in this along the way. And we've highlighted recent opportunities. We got this one here, was the most recent one. We had highlighted this opportunity in here. That worked nicely. That was a great add to an existing position. This is a great add to an existing position, and you can see, it gapped a little bit here, but if you hopped on that gap, you were rewarded. You didn't take any heat at all, and now it's consolidating again. So I'm not sure how much higher this is going to go, because from this cup and handle, I meant to point out the target of the cup and handle is up here at 215. Just a reminder, that's that cup and handle that formed all of last year. So, that's a huge target. But it's already made, a really good chunk of that move. And it looks like it wants to continue higher. So the higher we go, because it's had such a big run, the risk gets a little higher. So just make sure that, if you are going to play this, you manage your risk properly. Okay, Walmart was one we looked at this week. Figured, that this is probably a fairly easy, slow-moving trade. If you're not used to playing breakout trades or something, pretty easy trade there. Obviously, buy above the breakout. Some people buy at the bottom of the range, and that's a totally valid way to do this as well. However you do it, you've probably got your stop. If it's just a swing trade for you, you've probably got your stop just below the consolidation there. And we popped up, and it's consolidating again. Maybe it's giving us a second chance. Another one we were looking at is SATS. This is EchoStar, satellite company. We were looking at this nice pennant forming here. Well, it failed out the bottom of this pennant, but it didn't go very far, and it seems to be finding support at the 21-day moving average. It's kind of moved into the apex of that pennant. And I think what we could probably do here is sort of redraw this more as a sideways consolidation rather than a pennant, or a slightly ascending or descending triangle, I should say. If it's a descending triangle, we expect to see that break to the upside. Be aware that earnings are coming up here on election day, November 5th. So there's a little bit of time if a breakout for a quick swing, you're in there for 2-3 days, but you certainly don't think I want to be holding it through earnings, not off of a swing trade anyway. Another one we were looking at last week is Team. This is Atlassian. This was forming a nice bull flag. It still is. It's got earnings coming up this week on Thursday. There's probably really nothing we can do here now. So that is definitely coming off my list. And Duolingo, we didn't actually talk about this in the video, but I've got sort of some overflow names or some also ran names, and this was on a list that I threw into the swing trading channel in the Discord. And you can see that this one broke out to the downside. So the reason I'm highlighting this now is because I still like it. The play is still here, and if anything, I think the play is better. Because we broke out to the downside, but really didn't go anywhere, and then moved very quickly back up. What I'd like to see is 2 tight days in here, and then a breakout. We don't have a lot of time. Earnings are the day after the election, which is also Fed day. So definitely want to be out of it by then. Probably want to be out of it by the election. And we'll talk a lot more about the election in next weekend's video and through the week. But just on that, one thing I didn't actually mention earlier is I think that after the election we're going higher. Maybe there's a day or two of pullback, but after that I'm pretty sure we're going higher. It's the seasonally very strong time of year. Markets almost always go higher after elections, no matter who wins. It doesn't matter to the market that much. I think we're probably more strongly higher if Trump wins than if Harris wins. Because Trump is seen as more pro-business. But either way, I think the veil of uncertainty lifts, and people want to buy that market. Okay, and like I said, we'll go into more of that next week and through the week if you want. And if you got any questions about it, hit me up in the Discord. Okay, so new setups this week. We will start with Oracle. Nice bull flag happening. It had earnings, just a month and a half ago. So we've got time. So we had a nice tight bull flag, and it's sort of resolved as something looser and sort of downsloping. That's fine. It's still pretty much a bull flag, and you know how to play these, I'm sure. You just buy the breakout, and with a stop just below some lows within the flag, or well below. Depends how long you want to hang on to this. If if you're investing in Oracle, well, then your stop's probably got to be below here. But you shouldn't be investing in Oracle just based on this technical pattern, right? Most of what we show here is just nice little technical setups you can keep an eye on. Let's look at SE. This is C Limited. This has some tight consolidations going on. This stock is, I've always found this stock to be technically well behaved. Occasionally you get some shocks, but for instance, here's an example. We have this head and shoulders top. It broke down, measured a target on there, right? You measure the top of the head and shoulders down to the neckline. You measure that target, and it gave us a level here. Well, look at that. We spiked through it and popped right back up again, and we're off to the races. Consolidation, and then you get a nice move and move up out of it. Consolidation, well, this one we just got one little tiny leg up, so it's not the best move out of there, but it's it's building Darvis boxes where you get one box on top of the next, and it stair steps higher. Kind of floating along the 21-day moving average here, or close to it. So it looks, it looks ready for another move up. Maybe it needs to consolidate for a few more days before it goes. We've got some time on this. We got just over 2 weeks to earnings. So there's time for another breakout here, a playable swing trade. This one, QUBT, this is quantum computing. Something's going on in quantum computing. This is not the only name that's had a nice move up. I'm not sure what's going on here, but I just noticed all of a sudden these stocks started popping up on my scans. And this is the best looking one, in my opinion. Now, it's a penny stock. It's only $1. But, I mean, this is a nice looking pattern here. It's a nice bull flag. It's easy to play, easy to define your risk. Your risk defines to just below $1. I'd say 98 cents or whatever. And the target on that measures out to $1.80, which is also a pivot that goes way back into June of 2023. There's going to be some other resistance along the way. I think the 120, it just gets through. I mean, if it's going to break out of here, it easily gets up to the 129. That would be a new 52-week high up there as well, or at 132 would be potential resistance area there. If that does act as resistance there, maybe it consolidates for a couple of days and breaks out again. It could give you, if it does go up here and then consolidates and starts to pull back, that would be a great place to take part of the position off. If it did consolidate and then broke again, you could put that part of the position back on. Or if you don't take anything off, you could just add to it if it consolidated up here. But getting a little ahead of myself, first we got to break out of this bull flag. So yeah, I think this could be a fun play. However, we've very limited time on this. This again, earnings the day after the election, a week from Wednesday. Another one I'm watching, Rocket Lab. And we're almost done here. I know this video is going long. There's been so much to cover today. Yeah, we're just about done. Rocket Lab is interesting. Let me extend this line across here. So we had this nice consolidation. After a breakout from a similar consolidation. Now this broke out on Thursday, and then it punished the bulls. It punished anybody who got in that. With this shooting star doji. I think now, unfortunately, this is going to have to consolidate sideways for a few days. So if this, let me just get rid of that. If this were to give us a really tight consolidation in here, say for another 3-4 days, something like that, look like that. When is earnings on this one? Yeah, this is the 12th, so we got a couple of weeks here. A tight consolidation like that, I think we could get a strong breakout there and not have to worry about this wick. But for now, obviously there's sellers here, so we've got to be careful. Finally, CXW, and in a way, this is definitely kind of an election play. I haven't decided how I'm going to play this yet, but here's the deal on this company. This is CoreCivic. They provide and did provide detention facilities for illegal immigrants. So last time Trump was president, these guys did a great business because Trump loves locking up illegal immigrants. Expectation is that if he wins the election, that he will do the same again. I think people are sleeping on this stock. I think this will eventually go strongly higher if he wins the election. However, unfortunately, and this is what makes this such a hard play, Because if this didn't have earnings coming up, I'd probably just get in here, especially if it broke out of this bull flag, got above the 200-day moving average, got above that resistance level. I may just have to take a position anyway if it does, if it does break out. I'm actually happy to see this little this Gravestone Doji here that the breakout failed. Earnings are the day after the election. So I think that I just got to wait until after earnings, because I think the way I really want to play this is with leaps, because this is a longer term. This is a long-term play. It's not really the play out of the bull flag. That is a nice setup to get into a long-term play. But if we look back at earnings, we can see there are times that this stock has been really gappy around earnings. I don't know what this gap here is. Must have been some sort of news event. So I'm just really not comfortable holding through earnings. And I think because people are sleeping on this, I think we've got time. So I'm probably going to wait till after earnings, take a look at the leaps. This doesn't look terribly volatile, so they're probably not terribly expensive, and they'll probably be even slightly cheaper after earnings. So yeah, it could be an interesting play if Trump wins the election. So that's all the plays we've got. Let's come back over here real quick. Again, we do these, so if you're new here, if you've come over from the newsletter, welcome again. Thank you for coming over. I do these videos every weekend. You can see how they've, kind of an extension of the newsletter. And we also do an abbreviated version of what I was doing with the newsletter. We do that every weekday, and I'm going to post an example of that in the general chat channel here, probably for tomorrow morning. So this is all available to our members. If you go back into the Join Now channel, you will see the link there to a free 2-week trial. So I hope to see you come over and join us on the member side of the Discord. We'd love to see you there, love to have you join the conversation. And I hope you enjoy the rest of your Sunday. That's all we've got for now. We don't have any live sessions coming up the rest of this week. Or this month, sorry. I'll have the calendar out for next month. That'll be coming out shortly. So I want to thank everybody for coming out and watching this far. Hope you've enjoyed it. Hope you found this helpful. And we'll see you all in the Discord. Thanks, everybody.